trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Just scoping out the markets. Yesterday was a pretty interesting day. Pretty calm until Powell started talking. And shout out to Alan Perez. I didn't realize. I just got off the phone with an Alex, and I was calling him Alex through the stream yesterday. So my apologies to Alan. That won't happen again. But it was fun to tag team a little press conference with him, or just the Q&A at the Economic Summit, where Powell didn't really say things the market wanted to hear. So we dropped in the afternoon. I think at one point the S&P was down over 3% and the Nasdaq was down over 4%. It did come back a little bit late in the day, but pretty nasty move. Now, from a technical standpoint, I did talk about this. I posted this on YouTube. I sent out some trading view videos yesterday. I'm looking at this as a potential swing where this was the low from Monday the 7th. Okay, Monday the 7th. Tuesday the 8th, or sorry, Monday the 7th, Tuesday the 8th, which also sold all the way off. And then Wednesday the 9th was that big rip, pulled back the next day. I mean, just a lot of volatility, a lot of intraday swings. If there's any structure here to work with, this low to this high, producing a move like this, a low to high swing, okay? And then if we have this as a pullback, a lot of times what I'll see with some type of wave structure is the market has a retest of the high, a retest of the wave structure low, and then a retest of the high again. Now, I'm wondering if the retest of this high is able to send this higher, right? If we actually see this bottoming formation, is it able to get back into this gap here? That makes sense? So when yesterday started to slide and sell off, this is the first thing I looked at thinking, okay, well, perhaps this market's going to come down into this area, okay, before we start to get some legs to the upside. So maybe we get through this monthly cycle, which today's an expiration. It's the monthly expiration for today with Good Friday. Tomorrow, markets are closed. If we sell off a little bit and then we rally from there, maybe early next week is looking a little bit more optimistic. Okay. So that's where we're at. We'll see what today gives us. Overall, markets are clinging to some green. So SPX is positive, SPY positive, Qs slightly, actually totally flat. NDX is 0, Qs are 0. Dow, negative 1.47. Wow, that's way down for Dow today. This is on United Health Group. I think UNH took a huge dump today. UNH, baby, that is way down. Yikes. See what they have here. Dropped 20% after Q1 earnings, missed expectations. Wow. That's bad. Down over 19%, largest decrease in September. That has to be just a monster outlier. I can crunch the numbers and exactly how bad that was. Let's find out. Fudge, man, that would have been a great one to trade. And that's kind of the wild and crazy game of trading earnings is, there was nothing that I thought on UNH that would have been attractive enough to trade, but I will crunch some numbers really quickly. Look, this is what's going to happen too. If we see companies that are missing earnings per shares and revenues, I think the stock market is going to absolutely obliterate them right now. I think everything is super, super sensitive to any misses. Any bad news is going to be accelerated or exaggerated. Any good news might be okay because it's like, well, we need everything to be good because earnings are still very high with these current valuations. Okay. All right. So let's go UNH and let's talk through the numbers here. So the earnings expectation is around 7%. And I'm looking at a lot here in the single digits. So like 4%, 4%, 4%, 4.5, 4.5, 5, 6, 5.72, 7.39. I'm going to say even 7% would have been what I calculated. So 0.07 when the stock was trading up here at 585, 0.07 at 585. That was 585, 585.47. So I would have expected, within reason of what earnings have typically done, about a $41 move. Okay, so 40.98, that's a $41 move is what I would have expected to see this do. Okay, so a $41 move that turns into a $123 move. So monster payout potential by take. And this is what I typically do with earnings trades is I go both directions. Now, the one thing you never know is how do you know when a company is going to miss earnings or how do you know when a company is going to beat earnings? You don't. You really don't. So all I can do is go based on the last 10, 15 earnings reports. How frequently does it, hit expectations? How often does it get to the expected move? How often does it exceed the expected move? And what I try to trade is a strategy that if I get the expected move, I make money. And as long as I see that the expected move is hit probably 6 out of 10 times, 7 out of 10 times, I'll take the trade. And this one was what just it blew through it. So anyway, let me see. Like, would I have taken this trade? I took a winner this morning on DHI. That was a good one for an earnings play. I took a winner there. But if I go to a 7% move, let me see post earnings. How often within 8 days does it hit it? So I'm just checking out some data right now. All right. So how many times does it hit 7%? Let me tally this up. So it hits there, doesn't, does, finally does on day 8, which is my least favorite. Does not. It mostly doesn't get to 7%. Wow, that's a major move then. That one did day 8. I hate that, but it still got there. Does not. Crazy. Okay. So in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 earnings. So out of 16 earnings reports, I have 1, 2, 3, 4, 5, 6 times. I have 6 times that it gets to the expected move, which is 7%, and I have 10 times that it does not. Okay. So this strategy, like this would not have been a trade I would have taken. Because if it doesn't hit the expected move of at least 7%, I'm not going to take a directional trade here. Because even if it went up or down, that's a directional trade. And most of the time, it doesn't hit the expected move. So this would not have been on my radar to qualify as a trade of one of my kind of core earning strategies. But again, everyone looks at this and they're like, "Oh, exciting earnings! Look at this crazy move." Right. But what I think of is this move dropped 123 points. And the reality is, you can see how sensitive the markets are to bad news, right? This stock got smoked on what should be an average move of about 7%. It's down 20%. That's why the Dow is down. Okay. Now look at this from the weekly time frame. I mean, I don't know if this, I mean, is this stock going to bounce back from this, or is this going to be a floor that is broken? You would think that United Health Group is going to be fundamentally healthy. I know they had some drama last year when their CEO was murdered. That was some shocking news. Let's go to UNH. So trading well below estimated value. Earnings are forecast to grow. Level of debt. Yes, this is like the big air pocket that everyone's worried about this year between like July to December. Let's take a look at the fundamentals. Price to sales, price to earnings 37.1. I mean, longer term, it's like, yeah, there's some good upside to good old United Health Group, but not right now. So, I mean, is it an immediate earnings compression and we come down to like a, 30 multiple or less? Compare this to its peers, 37.1 times earnings versus 28.6 versus 16.5 versus, I mean, it's compared to its peers, it's almost double. It actually is double. So, um, I don't know, interesting, but the move itself was an outlier move. It's an outlier move, right? So anyway, crazy stuff. I do wonder if it bounces back. I wouldn't mind, taking a stab at it. But obviously, if I did something like, hey, I'm going to do a bull call spread. Well, that's if price stabilizes and heads back up. And maybe it does. Like if this responds, like we saw the reflexivity of, progressive, like when PGR. Let's go to the daily time frame here. Okay, when PGR snapped down to the 200 moving average, that was a really good opportunity to buy. Right, went up to all-time highs again. came down to the moving average, snapped back up again. So I'm wondering on UNH now that it's, kind of hated. This could be one of those rules. It's like don't guess, but if I get some asymmetry, let me see. Let me see. I don't know. I'll price it in. So we just had earnings. If I go out to, let's say, the May expiration here. So I don't love the strikes because they're 10 wide, but if I did like a 460 by 470, so this isn't a terrible trade. I mean, if I went for a gap fill, I mean, this actually works out pretty nicely. If I did a 470 by 480, I don't love this trade because I'm basically giving the market a $12 advantage over my trade. If I do a 470 by 480, I'm only risking $400 to make almost $600, but I need price to go $12 up. And the reality is, I think price can fall into this like 440 handle. So what I think I'm going to do here is let me see if I can do a 440 by 450 and take this trade for, let's say, even $5. And I'm going to go, I don't know if I can get this fill or not, but I'm going to go $5. So if it comes down to 440, I'm going to see if I can take this trade for 450. So I'll post this trade. This is going to be a pending order. It's going to be good for the next 29 days. Here's what happens. If price goes down a little bit further on continuation with the earnings play, if it responds at all, if I can get this trade filled for less than $5, okay? If I get it filled for less than $5, I'm going to take the trade because what I'm looking for is I want my reward to be greater than my risk. And if 440 is a nice support zone, if we came all the way down to 440, that would put this in the money a little bit. That should decrease the size of my debit. So I'm going to try to get filled in this for 450, similar to if I took the trade. This one's asking for right here. So that trade's only asking for about a 455 debit. So I'm going to do the same thing down here. I'm going to go 4.60. And that way I'm risking 460 to make 540. I'm going to place this trade. Okay, I'm going to place this trade. So this is good till canceled. And it's pending. So let me throw this in. We'll see if it works. So pending order. All right, let me post this in my Pulver alerts. This will be for stocks options. And new trade, UNH 5/16 expiration. Buy the 440 call, sell the 450 call, 4.65 debit. No, 4.60 debit. 4.60 debit. Pending. UNH dropped big on poor earnings. But fundamentally remains strong with 440 price level offering strong support. Price will need to drop towards that support zone and see if I can be filled at $5 debit or less to offer a 1-to-1 reward to risk. The 460 debit offers up that'd be a slight surplus if I had 540 divided by 460, I'm offering up about a 117% return. Return on risk. All right, so trade is posted, and then let me do a screenshot here and see if this will hold. So I'm looking at getting filled there, Anything above here works, and it's defined risk for just a couple of bucks. And we'll see if it comes down to find that low at 440. So let's go horizontal ray, 440. There. Okay, trade is in. So it's pending. It has to price has to fall a little bit with some of this continuation. Um, I wouldn't be surprised. We can have this conversation in 30 days. I wouldn't be surprised if prices somehow come back to fill the gap. So I think it was a bit of an overreaction. It's defined risk. So even if this thing were to fall to zero, it's like, well, okay, so I lost. If I get filled on the trade, I lost $460. But let's see if it gets filled first. Okay, set a chart alarm on the 445 handle, and keep an eye on the debits. Look for UNH debits. Because if it's under $5, I'm willing to take the trade. Doesn't have to be perfect, but over a 25 to 30-day window, if this reverts back in any way, shape, or form on look, basically a 3 times earnings move. Like I calculated about a $40 move, right? And it went $120. That's a 3 times earning move. Like that's a big overreaction. And typically prices, don't do that. Yeah, you'll see it move and then you see like a quick reaction. Okay. But markets are sliding a little bit lower today. I think we're back in red now. So SPX down a little bit. Nasdaq is down 0.5%. Dow's way down because of UNH. Russell is down. It's flat at 0.10. VIX on the day. If we go from 60 to 28 and then we're back up into like the 30s or 40s or even 30s, 40s, 50s, just more wild volatility. But again, it's what we're trading. It's our current environment. So to sit here and be like, oh, I can't believe this. It's like, well, it's happening. So let's figure out how to not do anything stupid and take advantage of it. When volatility is high, I do like to sell premium. I've got hedges in if we're going to go back and retest lows. So I'll just keep an eye on everything. All right, watching that for the day. All right, good on that. That was UNH. Big reaction though, yeah, for sure. Okay, let's go to the move index. This is bond volatility, so we should be seeing some TLT going higher. Nope, it's actually flat on the day. That means that the 10 years probably sticky. 4.29. We're still above the Liberation Day breakout. I'd like to see this come back down towards those Liberation Day lows, or at least the starting point, but just a big ugly shakeout with the bond market. If the market slides a little bit lower, this is probably a good thing for bonds. If this does act as a safe haven, I'd like to see TLT again from a high to low, a high, a low. If markets can come back and find some equilibrium, maybe this puts in a decent level of support. But that's the shaky ground right now with the markets is like, bonds are in a 4-year bear market. They're in a 4-year drawdown. Bonds are offering very little safe haven to cushion accounts. The 60-40 is the most basic, portfolio mix. And, it's done because most people forget about it when the market goes up every couple of years, and any bad downturn is like, yeah, it's over in a couple of years. No big deal. But 60-40 is a lazy approach to trading. I would look, if I talked about this before. So what I mean is if you did the 60-40, that would be this, right? 60-40 is, this is your pie chart. Okay. And you do 60% equities, 40% bonds. I think that's a horrible portfolio. I would rather go, even 50% stocks and 25% gold or 20% gold, silver. I can make this really simple. If you like Bitcoin, 50% stocks and ETFs and indexes, 25% gold, silver, and 25% Bitcoin. If you think that's way too much risk for Bitcoin, then sliver that down and maybe go 10% Bitcoin. Make sense? So 50% equities, 30 to 40% mix between gold and silver, 10% Bitcoin. I would take that over putting bonds in my portfolio anytime. So, and this is exactly why I think that if you were to own, and this is a question, would you rather have a bond that is backed by the good faith and credit of Apple or Google or Microsoft or any company that's worth, hundreds of billions of dollars in cash, or the US government that does have, you know, endless authority to print whatever they want, and it's kind of funny money. And it's like if there's ever a credit event or a crisis event, this is what's in question. It's like, is the good faith in US credit still backed? Does it mean anything? Do we just print more money and debase the currency? So yeah, I think that a 60-40 is garbage, and putting in, a different mix. I like gold. I like Bitcoin. It depends on, I think, where your risk parameters are at. But U.S. equities. If the world's trading equities, you're still trading U.S. equities. There might be a rotation out of the U.S. this year, so it seems. But as you can tell, if the U.S. isn't doing well, nobody's doing well. So it is in the world's best interest to see that the U.S. markets still remain resilient. We still have the biggest, most powerful companies in the world. I wouldn't be surprised in the next 5 or 10 years, we're still talking about the same publicly traded companies, because as innovation and evolution happens, and companies start making more money and become more profitable, they're probably going to do that through automation. And I wouldn't be surprised if a lot of companies are sitting on like these small market caps of maybe hundreds of millions, maybe a couple of $1 billion, but they never go public. They don't have to raise cash. They don't need to raise capital. They don't go public, and they're sitting around anywhere between 100 million to a couple billion, and they never go public. And all of a sudden, the stock market is different. I listened to an interesting podcast yesterday, Thoughtful Money, if you want to check it out. Adam Taggart's the host. Jim Carson was on. Um, Pretty scary stuff, like talking about where yields are at, how they've been pretty spot on with some of the risk off trading this year, and being, risk managers as opposed to wealth managers. Everyone wealth managers does something simple like a 60-40. I think it's trash. So um, risk managers probably fare a lot better. I am a risk manager. So I think that's the most important thing, is if you can survive and not risk a ton and not do anything silly, there's lots and lots of good opportunity to make money in these markets. But it's when times get like this, where it's like there's all these uncertainties, it's very, very slippery. So anyway, all right, let's keep going. Dollar index. Dollar index with oversold conditions, as I've been saying this week, because I saw the oversold conditions with divergence lows. Be careful on selling this dollar index, right? I do think that if the dollar is going to form a low and retrace, I still think there's a chance to sell the dollar. But the reality is, I don't know how much lower this dollar goes. I really don't. I think this could be ugly, but because of this low that changed courses, this low that changed courses, this low is so fast, I wouldn't be terribly surprised if we put in some type of extreme like wedge formation, and then we squeeze back up to this area. And either this is a rejection point, or this actually closes above and puts in the bottom. I wouldn't be shocked to see the dollar do something like that. I wouldn't be. I don't know, but I don't have a good trade lineup on the anybody that's been short the dollar, benefiting from Aussie dollar longs, New Zealand dollar longs, dollar CAD short, euro dollar, pound dollar long. You should be moving stop losses and taking profits. Trail yourself out, let it run if it's going to run. But I think it's moved enough in a couple of weeks that taking profits would be a good setup. Yep. Alan, did you know that if you did a 60-40 with gold, it actually outperformed 60-40 with bonds for like 90 years? So if you replace a bond portfolio with gold, it's actually performed the exact same or better. So you're not really missing anything. And the last 3-4 years, look, the bond market's been on 40+% the last 4 years. Gold is this is a crazy stat. I don't know if anybody saw this. I think I posted this in my journal yesterday, the trading journal. Take a look at this. The last 20 years. So you go 20 years back on GLD versus SPY. GLD just crossed over. So now your top performing 2-decade run, gold has outperformed the S&P 500. That is ridiculous. I don't think anybody would have really guessed that, because there have been periods where gold has done absolutely nothing while the S&P just keeps ratcheting higher. Here's a 6% move, here's a 10% move, here's a 50% move. Anyway, thought that was really crazy to see that. Now, I also think that this is what we're dealing with. Gold overtakes tech as Wall Street's most crowded trade, right? So it's not going to surprise me when gold comes back 15, 20% and finds that 200 moving average that I've been talking about, all year. I'm just not calling the top, because I understand that we could have a wilder, crazy blow off type move that maybe stretches way further than people think. So gold is pausing right here with a little bit of a pullback. I'm curious what the price action looks like if we have a large red candle. If we have a large red candle, that could be seen as a dark cloud, and perhaps that's a bit of a topping pattern on the daily time frame, and then maybe price comes back down a little bit. I'm still interested in buying dips on gold, but I keep telling you, I'm not interested in buying immediate dips. I want to buy this dip, not this dip. If this just goes sideways, sideways, and goes up again, goes up again, goes up again, all I'm going to do is take stop losses and start moving them, and then moving them, and then moving them, and then moving them. And I measured it, like we could have that big run like 2009 to 2011. Maybe this gets up to 3,800. Maybe this gets up to 4,000. And if it does, trail it on the way up, and eventually when it crashes, you'll be happy you took some profit. So anyway, keep an eye on it. All right. Silver, nice little comeback. That's good. Copper, I want to take a look at copper, 4.62. This one expires for me in 7 days, which will be nice to sit on over the weekend with the markets closed, and I'll probably have most of the profit. I think I'm up most of the profit right now. Copper is, I think the most I can get out of this. I don't know if so the spread itself, I don't think I can close it where I want to close it. So what does this close me out at? So I'll take about $150 profit. Which is fine. If I close it out now, or I can just let it expire and let it settle. But I'm up 91% of my max profit. Probability of coming back to 4.2, 4.19, 4.18, pretty slim. This trading at like a 3 delta. So unless we have a crash next week, this should be fine. This is a Thursday expiration, I believe. And I also have a profit trap that's over, I think it's over $1,000. So if price were to drop coming into this Thursday expiration, I might turn what's $160 profit into maybe 1,600, almost like $1,100. Maybe. We'd have to have like a really nasty move, but we'll see. I'm just going to let it go. I think I'm good on the expiration there to let it go to full expiration. Okay, we did gold, we did silver. How about Bitcoin? Bitcoin, impressive resiliency. Still more time on the right-hand side of the trend line. 20% drop from now. Yeah, let's go back to gold. That would be coming back to the 200 moving average, right? Yeah, if we come back to the 200 moving average, it basically flattens out gold. That's why I'm saying I don't think it's going to happen without having some type of, look, I don't know, but it wouldn't surprise me if gold just keeps churning and churning and churning and gets so overstretched that it becomes more of a crash type trade. That, look, you go out for the end of the year. If you're not timing some gains on gold, you might be left like, holy crap, I didn't make any money, And I don't know what that catalyst is. I don't know if the dollar pivots hard and goes up, if all of a sudden gold starts to go the opposite way. Like maybe that's the big pivot, is the dollar looks like it's on the brink of collapsing, and all of a sudden the dollar pivots hard and goes up, and then gold drops. I have no idea. Right? That could be like milkshake theory all over again, and everyone thought it was over and done with because the dollar's so weak, and Trump and co want to de-dollarize, but de-dollarization is actually bullish for the dollar. Just because if it's going to dry up liquidity, typically the dollar is going to get the flows. But maybe not. Maybe this is the year it changes. I still think that this level gets hit by the end of the year. So I wouldn't be opposed to seeing gold like capitulate higher. And this is where everyone's like, don't short it. I'm not shorting gold. But if it runs and it looks like it's a broken chart, by the time this stretches up like another 10, 15, 20%, I've got to be looking to take some stop losses, because that's probably going to lead to what every chart leads into. Every chart that looks like this, bull market, nice and healthy, and then capitulation. Every chart that looks like this looks like that. Every chart. In the last couple of years, all the examples I've seen have been in futures. Cocoa did that, coffee did that, orange juice did that, lumber did that during COVID. I mean, you can talk Palantir last year, Carvana. Like you've seen all these stocks do that and just have these monster corrections. So if gold gets to that point, make sure you're trailing taking stop losses or taking trailing stop losses. All right. As I said, Bitcoin is showing, some good resiliency, not full on risk appetite. I still think this goes sideways. As long as we hold above, about 74K, this looks pretty good. Now, a break above here has, what looks to be good bullish confirmation to get back to retest highs, but don't be surprised if we spend time going sideways. Right? More accumulation like we had pre-election, more accumulation where it's like, yep, this just rounds out a big low. Eventually, when it's time for some risk appetite, maybe this comes back into play. I would certainly cheer on, especially as a diversified trader this year. It's like I've got my hands in a little bit of everything. I'd love to see gold continue to do well. I'd love to see Bitcoin get some risk appetite runs. Um, I'd love to see the stock market, have volatility not go back up to 60 again. But this could be one of those years where it's like, who knows? Maybe this is one of the more like persistent volatile years, and nobody really knows what's going to happen. I mean, that could be the new normal. That's going to be making your head spin. Okay. MicroStrategy still at 310. Ethereum still on the left-hand side of the trend line. Copper, like I said, looking pretty fine. Japanese yen, anything here? Let's check currency strength for the day. So New Zealand on top, Swiss on the bottom. Nice. 120 pips between those two. Swiss on the bottom makes me happy. It's like better than the fruit on the bottom yogurt. So anytime I'm seeing Swiss on the bottom, that's good. I do wonder also if the Swiss is going to intervene at some point. They've been very quiet, hands off the wheel, but their interventions that we saw back in 2011 and 2015, completely rocked the forex market, and we're still sitting at historical levels. Uh, like the Swiss has been like this. Well, here's why, and I'll make another interesting proclamation. I think that if gold finds the 200 moving average, the Swiss franc is going to weaken because of that. There is an interesting correlation between Swiss franc and gold. So if gold does correct, okay, and again, I say the flip side of that is if gold capitulates even higher, Swiss is going to get stronger for another potential crash move, which would not be fun. Okay, but if we do see a correction in gold, I think the Swiss is going to go with it, and some of my positions I have that have been legging into for a while are hopefully going to work out. So something to keep in mind. I wouldn't be surprised if gold getting weaker. If gold gets weaker, Swiss probably gets weaker along with it. Japanese yen continues to grind higher. I'm still long FXY, so I'm back. This is kind of nuts. I'm back up towards it's not huge gains here, but I do have some shares of FXY. I might be up a couple $1,000 here. FXY, I'm up 3 grand. Let me see. Do I want to? It's like, do I want to hold more? I mean, we had a whole volatility event on the Japanese yen, and now FXY is just slowly going. I don't know how much higher I expect this really to go, but I guess we find out. Dollar yen is kind of the inverse of this, right? So it might be wise to, if we've got dollar yen coming into lows and potentially symmetry here, would anybody be shocked on the dollar yen if it holds this level and then bounces back off of it? If that's the case, I probably need to take some profit on FXY. So maybe that's not a bad spot just to grab some profit. I kind of hate taking profit on FXY because it's been just a nice little hedge trade, but I'm not up, I'm not killing it. I'm up $2,800. Big whoop, you know. But I think I could sneak in, maybe a run to like 66 or so. So 65.88. If I get another dollar out of that, it'll be, I don't know, they're like 600 to $800. I'm going to put a chart alarm here at 65.50. If we get there, I'll start looking to take some profit. Here's another technical formation. Is it possible that this is a range where we just go from high to low, high to low, high to low? Is it a range? Or is this the potential bottom where we have a low and a center high? And if we actually break above this, are we about to see some Japanese yen love? That's a question mark, but could I take a $64 position that looks like a profit target at 65 and take it up to 75? Well, that'd be a much bigger win. So I think in terms of just holding the shares, I'm just good holding the shares. If this could pay me six, seven, $10,000, or I can get back in for more shares down here, I don't think the Japanese yen is going to weaken to infinity. I think at some point, like this Japanese yen is going to hold firm. They're the one central bank that is still raising rates right now compared to everyone cutting rates, and you got to wonder how that plays out. So I think it still is kind of in the hedge camp for me, although not as aggressive as some of the futures hedges I have. It could also be something that if it breaks and goes higher, I would like to benefit from that move. Germany, like I said yesterday, look for some type of like cup and handle formation. We dropped aggressively. Um, well, I mean, this could work either direction, but I think from this flush down, if this pulls into a bullish pattern, that looks like a cup and handle. So we drop aggressively, we V bottom, we come back up here for some indecision, and then we see if it can break and go higher. So I'd be looking for a trade like that to see if Germany can get back to highs. This would be in line with the early rotation we saw out of the U.S. Germany was one of the best performing countries this year, along with some other eurozone countries, and all of a sudden that was just reset with that kind of systemic risk we saw over over the April 7th through the 11th. Oil, yeah, I didn't mean to skip oil. Oil, it's up. I mean, this little like flashy bottom is in. I don't know. I mean, I'm still very skeptical that oil can get above the 200 moving average. We did break this floor, so if you're lucky on the long side for oil, maybe coming back to like 65 or $66. If that becomes resistance, we could come back down and revisit the lows, right? I mean, I don't think oil is going to be like breaking and then breaking. I don't think oil is going to 80, $90. I don't. So I think if oil is going to go from this low and coming back to what is support, all this support back here to become resistance, we probably have room to run to like 65 to 65.50. So if you're long, that's about it. I would expect this to still be a high that's relatively safe. This would be a low that's relatively safe. I'm sure there's some oil traders that are just doing strangles, doing iron condors, just selling some premium, and just trying to pull in some income as it's just very slow and choppy for the next little bit. UNH we talked about. Yeah, there was a big miss in earnings. It was down like 19, 20%. It was a 4 times earnings print. So I expected to see about a $40 move and it went $120. So I guess it'll be about three times earnings print. So that's just a big whiff. But I did put on a trade on UNH to see if I can catch something around 440, see if it could fill the gap. Okay. All right. We did gold, we did silver, we did Bitcoin. Coinbase 172. I got a Coinbase earlier for profit. That was good. Closed out about 95% of that credit. Copper still looks good for next week. Japanese yen, I was on. FXY, I'm going to hang on to it a little bit. Chart alarm set. I'll debate on this. I might take the profit. I might take the profit and move on. But if the Japanese yen catches some safe haven bid, it may or may not. But something tells me that the Swiss has been the better safe haven this year versus the Japanese yen and the dollar. EWJ, I'm in profit. I want to see if this gets back to the highs around 71.50. So let me set a $71 chart alarm. That'd be up about $6 a share. It's not bad. I would take that. I'd take that win. If I get up there, I'd be up a little bit of profit, maybe $5,000 or so. I'll see. Germany, we did looking for like a cup and handle pattern. FTSE, same thing. I just like the structure less. I still like Euro stocks and Germany better. Argentina, I missed my 200 moving average to buy. It obviously was like, holy crap, this market is. I mean, this was like everything dropping, right? This is like the systemic drop that happened from April 7th to the 11th. We had a big rip on Wednesday. It's right back where we started. So there's no action for me on Argentina. China, same type of thing, looking for a cup and handle. Brazil, want to see if we can break above this. Let's set a chart alarm here above the 200 moving average. So greater than 200 EMA. Same thing with Latin America for back above this chart alarm here, greater than 200 EMA. Mags, thanks to NVIDIA, this is getting dragged lower. Tesla, I might be getting some Tesla assignments. We're at 240 today. 255 chart alarm. Let me set this at around 250 today. I don't know if we can get there. If we can, then I actually got some profit on Tesla without taking on any assignment. Um, because the premiums are so high on Tesla, I wouldn't mind getting assigned. Let me see how many trades I have. I might have 400 or 500 shares coming if I get assigned this weekend on Tesla. So I do have some shares that are dollar cost average shares. That's not what I'm talking about. I'm looking at the this trade here. So potentially 100, 200, 300, 400 shares, 500, 600 shares. Okay, well, that's going to be, wait. Yep. 500 shares, all my April 17th. So one, which is a portfolio margin account, two, portfolio margin account, three, portfolio margin account, portfolio margin, and then a margin account. All right, so potentially 500 shares. Now, they're each in individual accounts. So 500 shares, the plan, I talked about this yesterday, possibly getting assigned at 255. My break even price would be around 247.98. And we have earnings coming next week. So Monday, after the assignment, and this, again, if price goes up to 250 today, freaking great. Because at 250, I'm pretty much sitting at a $200 to $300 profit. But we've got to rally $10 in the next, 5 hours? So maybe, but the market's going to have to cooperate a little bit better than it is today. Otherwise, I'll take the ownership. We're probably just dealing with some range trading. What I want to make sure that I do on Tesla would be either one, I buy a very cheap out of the money put and have any type of quick protection, or I see what a debit spread looks like where I were to buy a put and then maybe sell a put. If I could pay, let's say $500 to make $20 to $30, that would be enough to offset my cost by another, $15, $20, lower my cost basis from 247 down to 227, sell a covered call, and just quickly get this price down as aggressively as I can down to like $200 or less. Okay. So, you thought about this, United Healthcare, right? Well, let's say Tesla has the same type of move. If it drops like 3 times what it's expected, that's a huge, huge move. So I need to make sure I have some type of protection. Now I could put on a collar trade and let it go both directions. And if the put works out, great. If the call works out, that's fine. But what I was contemplating is if I don't cover the upside and somehow, some way, Tesla comes in positive. I don't know if it is. I don't know if it's going to. This is certainly a volatile stock, and I think with the deliveries and the inventories and the question of Elon Musk and everything that surrounds it, I think that I need to do everything in my power to protect the downside and get the cost basis as low as possible. So anyway, we'll talk through it. I'll figure it out. I'm hoping I can flip it for a nice little winner. If I pay for a debit spread, but it goes up, 10, 15, $20, I still make a couple $1,000 on it. I'm happy with that too. But I want to make sure that if it drops, 30, 40, 50, $60, let me take a look at Tesla here. Because the average move on Tesla is around 14%. And you can see a lot of double digits, so somewhere between 10 to 14%. I'll be on the high side and say, let's say we have a 15% move. So a 15% move, and the price is 240. So I'm looking at about a $36 move. Okay. So can I put something in that helps me lower my cost basis, 15, 20, 25, $30, and then I can sell a call and collect another 15 or 20. And just, within 2 trades, I could probably lower my cost basis by $40. I'd be okay doing that, So I don't think it's a difficult one to repair, but definitely got to be mindful of the capital that I'm allocating to own the shares and then flip it. Okay, so they'll see. And somehow by surprise today, if we get up to 250, I won't take any assignment and I'll just take the profit. I'll close out for probably $1,500 today. All right, what else? We did Mags. Apple, closed out for profit on Apple this week. Amazon, I still have some ratio spreads out here down to the 150 level. Broadcom, I'm staying out of that for right now. Google, I'm still dollar cost averaging into that one. Meta, I'd like to see Meta go lower, which it is. So we came back to the 200 moving average. We're dropping. I'm going to see if Meta can settle back into previous. This actually is this is a good spot to mark in a chart if you like Meta. There's a huge gap back here between 450 and 400, and there's a previous high from the 2021 deleveraging. So this is September when Meta peaked in September 2021. The Nasdaq peaked in November 2021, and then we dumped. Okay, that was a 76% decline. Now, technically speaking, surviving that market, I think that Meta still is fundamentally strong. We go to Meta. Okay, I mean, Snowflake wise looks pretty good. Price to earnings, not crazy expensive considering most tech. I mean, Nvidia is like 200 times earnings, but fair value at 887. If I could scoop up some Meta at 450 or 400, I wouldn't mind it. Wouldn't mind that at all. So there's ways to trade it. There's ways to income trade it. There's ways to start a position, buy fractional shares. But just thinking if we came down into this like 450 to 400 zone, I'm going to start taking some nibbles on Meta. Microsoft, a lot of income trades here. Close for a winner, close for a winner, close for a winner. And still have, I don't know if I have other trades on for Microsoft or I just closed them all out. I think I stacked up quite a few on Microsoft. See if I have any combo trades in. Just fractional shares. So I'm just sitting with a light dollar cost average in Microsoft, and break even price on most of these is around $400. So if we get back to all time highs, that was 450, that was 468. If that's a big question, is if we go to all time highs, then hooray. Then I'll sit from a 416 break even and look at 50 to $60 a share and be pretty happy with that. But I'll just ride it out for right now. Netflix, I have an earnings trade on. We have earnings today after market. I got my expiration on Netflix out to May 2nd, so I've got a couple weeks to let price do its thing. If Netflix comes in super positive, perhaps we come back to all-time highs. If that's the case, I'll close out for a win. If we have a super negative Netflix and it just, I mean, this is my concern with Netflix is we would go high, low, high, low, high, low. We can make some fresh lows. That's an easy trade. If price is way down here, easy money. Price is up here to highs again, easy money. If it's in between, well, then I'm going to give it a couple weeks to see if I can hit the expected move. Okay, NVIDIA 101. Like I talked about this yesterday. I mean, basically, NVIDIA had to write off like $5.5 billion, and they're potentially losing out on $18 billion of sales because of a little nuance in this whole trade war tariff situation of what the U.S. is, claiming that companies can and can't do. So somewhere costing NVIDIA about $18 billion is not a good thing. That gap yesterday, we're still flushing down a little bit lower, and that dragged the markets down yesterday too, especially with the Fed not coming to the rescue, which they're not. Tesla, we just talked about. Berkshire. Um, I'd like a top. I'd like to call the top in Berkshire, but I think that's a stupid trade, so I'm not going to. Plus, I looked at like a call condor. It's just not a good trade. I get like terrible premium for what would cost me maybe $2,000 or $3,000 to make like $100. It's just not a good trade. So I'll wait. I think that there is. I don't know. There's something here in kind of Buffett's genius. Like, hey, we're worth hundreds of billions of dollars, and we're sitting on 20% of its cash because we think that things get worse and valuations come down a lot. So, meanwhile, 1 and 3 year bonds are up. 7 to 10 year bonds are up. TLT showing a little bit more. Again, resiliency, yes. Some security, yes. Some stability, yes. But still not anything fantastic. So 10 year is still above the Liberation Day announcement, and I think that's a spot where I don't know. I mean, this is my biggest concern literally from June to December when the Fed starts cutting rates. If the bond market did this last year where the yields went higher, that's my biggest concern going into June, December this year is that the Fed starts cutting rates and the yields go up. You talk about a freaking backfire of fundamentals and talk about a backfire of 40-year trends. That would not be fun. To basically see that everything that you thought was going to happen and everything that history would tell you could happen is not taking place. So I don't know what's going to happen when the Fed starts cutting rates. Usually, when the Fed starts cutting rates, they're cutting rates in a period where times are slowing down. Powell even admitted it yesterday, like there's an economic slowdown. They're worried about the administration uncertainty and all that's causing the markets. Price stability and labor is still highly important, as well as inflation data. But if the Fed cuts rates and the yields respond the opposite, like they did in September, that's not good for anybody. That's terrible for small business. That's terrible for any homeowners. That's terrible for any refis. That is going to freeze everything. So I hope that's not the case. I hope this will resume what's been a pretty consistent 40-year trend. But I do think that this could be an interesting year where the Fed is essentially, their powers are zapped, they're neutered, they're put into a corner, and they can't do anything. It's like how many trillions of dollars of liquidity is it going to take to get this market price stability and rescue the market? I mean, probably 15 or 20 trillion dollars, not six, not 700 billion. I mean, it's like the amount of leverage that is in the system now to make things work is staggering. It's like for every $3 of debt, we might get $1 of growth. So I don't know what it takes. And I also think that the lows we saw at 21% are not low enough. If the Fed's going to come to the rescue, it's probably when the market is just so beat up and like everyone is just wanting to stick their head in the sand. And that's probably 35, 45, 50% lower from all-time highs, I should say. Okay. So we'll see. This is a big concern in 2025. If the Fed is cutting for 100 basis points, do the yields actually go with it, or is there a shakeout and you kind of get this whole this non-correlated bizarro bond trade? I don't know. Okay, let's go currencies. Unemployment, everything looks okay. Junk bonds, this is your AAA, triple B, triple C. So credit spreads have tightened a little bit, which is better than loosening. So we stabilized a little bit better after that Wednesday rip, which is kind of encouraging. LQD, same thing. So looking to see like making sure there's better liquidity in the markets. You can see it. It's not as crazy out there as it was a couple weeks ago. China, anything here? Just kind of waiting this out. I'm still long Baidu and Baba still. I do have a legitimate concern this year that the U.S. might, instead of doing this tit for tat tariff war, maybe the U.S. says, "Hey, let's going to delist your stocks," and I'll be on the hook for taking losses in Baba and Baidu, and that will piss me off a little bit, but out of my control. JD has earnings May 15th, and I've got a covered call up to $40. I'll see if earnings are positive or not. Schwab dividend, Schwab growth, just kind of hanging in dollar cost averaging into both of those. This one I bought around $27. It's down, $1.50. I'm not that worried about it. So I'm just going to sit on Schwab dividends. Schwab growth, I bought a little bit of this one at the 200 moving average around 26. It's down a little bit more. It's down like $2.50. And then SCHY is the non-US dividend. Or I'm sorry, the non-US exposure ETF. Advanced decline line versus this. This would be another one to watch for. I keep talking about this market breadth indicator. If we come back down to revisit the lows, this is probably a good timing indicator to maybe get short-term long. So I will be watching this again. Do we come back down to, let's say, I'll put a chart alarm down here at like 6. Actually, I don't know if it's going to go that low. I'll put like a 7 or 8. That's 7. I'll go 8. I mean, honestly, you know what? Fudge it. I'll go to 10. It's already trading at 20 right now. I'll go 10. So 10.8 is my horizontal line. So I'll just set a chart alarm there on the line. If that activates, then I'm looking for some timing to get long again. Same thing on the Nasdaq. If we come back down to, I'll say 730. And just right there where we had some good timing on that short-term pop. Chart alarms. Let me get rid of the inactive ones. Delete all inactive. There. Okay, let's get to some currencies. AXP, we have earnings. Came in positive this morning. We're up to 253. I took profit on the 417 expiration, and I'm looking for the May one to also give me some wins. I need price to get back above 260. So I'll set a chart alarm at 260 and see if I can take another income trade on AXP. Everything else is okay. Palantir, I've got full expirations for some ratio spreads. This is up like I think $5,000 or $6,000 on Palantir. Palantir is up around $4,200. So I'm just going to let these expire. So ratio spreads, bull put spreads, naked puts, just let it all add up about 95% of that profit. I'm just going to let it expire. So I don't think Palantir is going to drop $50 today. I think I'm pretty safe to let it expire. Carvana, stay out of that one. I'm staying out of that one. O'Reilly, my hypothetical trade worked out, but it was a terrible buying power requirement. It was like I had to tie up like 10 grand to take a trade for maybe $500 or $600. So I didn't take the trade, but it did work out. Like timing wise, it did what I needed it to do. So anyway, I just thought this was crazy for a little tiny auto parts store with little tiny brick and mortar locations is a $1,400 stock. Redfin, let me go to Rocket. I haven't looked at Rocket in a while. Down to 1230 until like rates come down and mortgages look a lot more enticing. I think anything with housing mortgages is going to be tough. Uber looking good. Ratio spread. This one is going to be looking good for full profit. Lyft, I'm still long. I bought shares at 1179. Sectors, let's get currencies and I'll let you go. Aussie CAD fill in a pocket. I think we put in a nice little bottom here. This is a multi-year retest. I mean, this is why dollar cost average and trade robots on pairs like this because they're freaking rock solid. And what was a breakaway move is completely reverted, and that's exactly how I trade this. Aussie Swiss, I'm looking for a bottoming formation. I'm hoping that we're getting it. Like I'm hoping this is a bottom. And if we come up with some type of head and shoulders or some type of cup and handle, then another retreat or another rally back into the pocket. If we can get back above that, I'd love to see some highs get tested at some point. Again, like I said, maybe this is a gold play. If gold is going to correct, then maybe the Swiss gets weaker. Ford, you want to see Ford? I mean, you can buy and be excited about a 3% dividend or 6% dividend, but you're going to get like 0 to 0 price appreciation. I mean, if I'm buying Ford, it's like, well, it looks exciting at COVID levels at $5 a share. Otherwise, the liabilities on Ford, it is such a difficult stock to trade because it goes nowhere. It's super low beta, and the pension liabilities make this like almost a stock that's like it'll never make money. So, I mean, here's what it looks like. Looks decent, but earnings are forecast to decline. Debt's not well covered. Dividend at 6% is not stable. But trading below estimated value, earnings are growing. Like these are good. These are encouraging. Maybe it helps because in the space of a 6.4 price to earnings, right? Like that's cheap. Okay. But you're looking at a fair value at $12. And like, what upside are you excited about? I mean, I traded from COVID lows and I let this thing go at like $15 and I was stoked about that trade. And then I was dumb enough to get back in here at $11 and I'm still holding some shares. And I'm like, well, I guess if I bought some shares of Ford at 1150, which was strong support, I didn't take profit. So this is area 1. If we ever came down to COVID levels, area 2, and I'll just get rid of it. Area 1, area 2, this is my break even if I got filled on both those levels. Anything above that, take profit, move on. I mean, it's just not a great stock in my opinion. So, all right, let's go back to currencies. Aussie Swiss, I'm looking for a bottoming formation. Hopefully we get it. If I see a bottoming formation, I'll start moving my buy stops lower. Yen pairs, as I said, be careful. Aussie New Zealand, we do have some daily oversold conditions. I'm going to just scale through this one. I've got some levels in to add some buys and some buys and some buys. And I'll just hang in there. Like this currency never really bothers me. I'll just hold. So if I level in, I think I can get it back to break even. This is one losing position. That's my profit target. So if I go 1, 2, 3, 4, this goes lower, and then I just follow my break evens. As long as I turn it into profit, I'll take, 50 to 100 pips net. So I'll scale into this one. Aussie dollar, I was long. I closed out. This trade's done. This could be a bottoming formation, right? We could have this sharp move here. Maybe it settles back in for another range trade. If it goes higher, then there's a good swing trade. There's a good swing trade to symmetry with a stop loss below, but I want to see the dollar index show us that it's going to go lower. I think the dollar index is poised for a correction. I think the dollar index, forms a bottom, goes back up a little bit. CAD Swiss, hopefully, off of these recent lows is going to start giving us a bottoming formation. I'd love to see this make its way up, pull back here, have a head and shoulders, measure a third wave and fifth wave, get the fudge out of this trade. Okay. I mean, it's, I mean, again, I'm talking like a drawdown of maybe 3 or 4% in my account, but I mean, I don't know, hundreds of pips away from my break even here. I guess not really. I'm about 100 pips away from break even. Um, but man, this is such a big trading opportunity. I'm ready to close these trades out. I've been, enjoying a whopping 4% swap for 2 years. Who cares? I want pips, man. I want to close these out for. I mean, honestly, I'm going to be close to like doubling the size of my account. If I get the pips that I want, I'm going to turn a huge profit on these Swiss pairs. But that comes with the unknown of like, is the Swiss going to break something? Are we going to see like some crazy flash crash that's going to be, thankfully I don't trade with all my leverage and I still have like 80% cash and margin available, but this is the threat and the unfun side of trading forex and levering in. It's like I just have to trade really small, and eventually I get the trade that I want. But if I see more confidence in a bottoming formation, then I will move these buy stops down. But not yet. CAD yen, no trade. Maybe if this holds, if CAD yen holds, I don't know. Just if you're taking stabs at this one now, there's probably some ugliness of the lows, but we could bounce back up there. If we have a risk on rally through May and June, July, I could see the yen getting weaker. I am really surprised we haven't had more of a follow through since Wednesday. So Wednesday last week, and the market ripped up a ton. It was like a face melting bullish day. We had no follow through Thursday, a little bit up on Friday. We're sideways again. It's like there's been zero follow through. So I do wonder if seasonality wise, we can just make a slightly higher high, and we haven't seen it. So if that is the case, I could see the Japanese yen getting a little bit weaker with some type of risk on rally. Yeah, it's so I'm getting swap, and technically they're historical lows, so I'm holding it. I mean, to me, the upside is if we're trading at 30-year lows, I'm going to be a buyer. It's that simple. And so I just scale in. I give myself, probably 1,000 to 2,000 pips worth of wiggle room, scale in every 200 pips, 250 pips, and then hold to the target levels and the patterns that I want to see. So, I mean, I've done it for 15 years, and it's been a pretty good process so far. So, but it does take this. This is definitely the more patient I've been. I've been in Swiss pairs since the beginning of 2023. So literally, I've been in these pairs for 2 years. I've got some swap to show for it. I mean, I think I made 30 grand last year on positive swap. It's better than holding and getting dinged, but I'm also upside down in some drawdowns, so I'll manage it. Adam says time to talk about gold. We did talk about gold. The gold's fine. It's just crowded. It's overextended. If gold's going to go any higher, it's because the market is essentially using that as just a crazy safe haven. Be aware of the capitulation move higher, but gold, in my opinion, is going to be, if it goes higher, it's likely going higher as this like crazy safe haven that's going to crash. If it pauses and pulls back, I think there's still dips to be bought. So I still like long gold. I just want to buy lower. Swiss yen, no trade for me. Euro Aussie, stay out of the crazy volatility. Euro CAD, I mentioned this week, if you're watching on a smaller time frame, watch that resistance for potential sell trade. Stop loss above. Just be careful. Make sure you confirm that on a smaller time frame. Euro Swiss, holding lows. This actually would be a beautiful pattern here. We tested this low. Okay, if we come all the way back up to this high, we have a pullback. I think that's a beautiful 3-wave move. And if I get back to that level, I am going to make lots of pips and lots of profit on Euro Swiss. If it's a 5-wave move, that's fine too. We come back up here, pull back up here, pull back up here. That's fine. That's good enough. But that's what I'm looking for. Aussie Swiss, I literally did that, Lee. Very similar. I'm just looking for a bottoming formation. Here's Aussie Swiss. So is this going to work its way like 1, pull back, 3, 5, right? Like 1, 2, 3, 4, 5, and we get back to these levels. That's fine. I can turn this whole thing into a profitable trade. What I'm looking for right now is before I just dump a bunch of money at these lows, I will wait, because if we come back down to the lows again, I want to scale back in and lower my cost basis. This is my target 1 for right now, but I think if I can measure out a 1, 2, 3, 4, 5-wave move, that's my profit target. Right? Like I don't know. I'm just not in a huge hurry. It's like I've been holding these freaking trades for 2 years. So it's like, am I in a hurry? Not really. I'm just gonna, stick with my technicals, let them set up, let them confirm, add to my winners, and figure it out. Yep, and I'm CAD Swiss too. I'm Aussie Swiss, CAD Swiss, Euro Swiss, New Zealand Swiss, Dollar Swiss. I closed out Pound Swiss already. I want to keep that one has higher leverage requirements, so I closed that one out. CAD Swiss, I'm still looking to see if we have a bottoming formation. Euro Swiss, again, if we come back up and have some type of 5-wave move to get back to like 96, I think we can also head up to like 98, 99. Just want to measure it out. Euro pound. This one I was buying at the lows at 83, took a couple of profits. I'm just letting a robot work on this one. Euro yen, no trade. Euro New Zealand, I said watch for the sell off. I'm just not trading it. Euro dollar, take your profit. Trail your stops, take your profit. Super overbought on the daily time frame, likely going to have a pullback. But we were long around the 108 handle, took profit around 111.80, 111.60. So that was a pretty good trade. I'm not in it right now. Pound Aussie, be careful. It's probably fading. Pound New Zealand, pound CAD, similar. I said pound CAD, if it comes up to these highs, look for some resistance to sell. That's about it. Pound Swiss, no trade. I'm out of the pound Swiss. I still think this one goes up. Like if you're interested in this trade, I just don't like it because the margin's like 3 times more expensive than my other Swiss pairs. But this is probably going to find this pocket. So, I mean, don't be surprised if we go down, up, maybe pause, and then go up and fill the pocket, or we go down, up, down, find the lows, revisit the lows, and then work our way back to the pocket. So this trade is likely going to hit this support, this area, anywhere for profit would offer up another 250 pips to 350 pips to 450 pips of profit. It's going to take some time, but we're going to probably form a low, form a bottoming pattern, and then price will revert with that little crash move. Not a bad trade. It's certainly an awesome discount. This was as bad as the crash we had in 2022, I believe. Nope, 2024. That was the July to August deleveraging. So we're just kind of starting from there again. But I'm not heavy on pound Swiss because I closed it out when we were up above this like 114 level. I've been scaling in since it's like 111 for 2 years. Once we got up above these highs, I closed out my profit. I'm pretty fortunate, thankful that I did. But this isn't a bad spot to restart and just stay small, and you can get anywhere between like 250 to 450 pips, I think, pretty safely. Okay. All right, pound yen, staying out of that one. Pound New Zealand reverting back down. That's fine. We had some noise up here, but it's still on the smaller time frames found resistance and sold off. Pound dollar, as I said with euro dollar, moving stop losses right now. If you're long this pair, great, move your stop losses. If you're short this pair, don't. Not yet. I don't think it's a good short. Like let this thing maybe get up to resistance at 3,400, then look for a short. Otherwise, if you're long, stay with trailing stop losses. New Zealand CAD. Bought around 8,000. It's up to 82.76. I just level in. I was going to buy here and buy here. So obviously this one was in at 8,000. This one at 77 didn't fill. But I still think we're just in a big range. You have a massive low down here and a massive high right here. All this noise at buying lows are now starting to show profit. New Zealand Swiss, same thing. Looking better. If we can get a 1, 2, 3, 4, 5, that's one pattern. Also, this could be just one giant wave. This could go all the way back up here for 1, 2, 3, 4, 5, and maybe I come all the way back into this inefficiency. Again, this chunk of buy stops, I want to move them lower. I'm just not ready to do that yet. I want a little bit more proof here. If this comes back to retest the lows, I'm going to move these all lower and look for a bottom. No trade. New Zealand dollar still running. I mean, I took profit near the range highs. I don't know. I mean, it looks good, but if it's a pullback and it goes higher, like there's open space here on New Zealand dollar. It'd be okay by me. I'm just waiting for an entry if I'm going to do something. I've got no trade on it right now. I was buying off these lows, took some profit. Dollar CAD. If it doesn't hold at 3,900 or 3,860, then perhaps this does, in fact, it's just a crazy top that we put in after. I mean, I was long here, and I got out. I didn't short this. I know there's a swing trade. We talked about that swing trade. If you wanted to do that sell trade, that stop loss, and go after some symmetry, you're already out of the trade for profit. So I don't know. This is in the middle of all this chop. This is a huge range with a midpoint. This could be a very messy spot. So I'd rather wait. If I can buy it lower, or I can sell it higher, or if it does turn here and bounce, then maybe there's a buy opportunity to go small stop loss and then asymmetry to the upside. But I wouldn't be surprised if it just gives you a bunch of headaches. Like dollar CAD's not an easy currency pair to trade. It can be pretty messy. Dollar Swiss. not a good pair. We broke the lows by about 150 to 200 pips. This is another one I'm watching carefully, because if this starts to get extreme, which it already is oversold, I'm starting to look for some type of pullback bottoming pattern and some type of recovery back into maybe this midpoint or back into 9,200. But a bottoming formation to me is worth following to take some trades. Not there yet. Okay, dollar yen. I think dollar yen, may be able to revisit the lows, and it's really close to them already. If it goes a little bit lower, I wouldn't be shocked if it's a bear trap and a bullish trade. So just a big ugly range for what? 2,000 pips roughly. What was the high we had? Like 161, 162. Yeah, 162 highs all the way down to 140. I mean, a 2,200 pip range. So if it comes back down to those lows, like, don't be surprised if it bounces there and it's just a big 2,000 pip range. Right? So that's everything. Okay, I'll let you go for today. Let me make sure I'm not late for a session. I think I'm good. Anything for today? Yeah, I'm good. All right. Thanks, everybody. Have a great Thursday. Markets are closed tomorrow for Good Friday. Have a great holiday weekend. See you soon. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.